All right. So, Bitcoin crypto market updates. I did a quick check in the room, and we've got a mixed bag. We've got some people who are hedged into cash. We have some bag holding happening. We've got a mix of stuff that's happening right now in crypto. Now, obviously everything is extremely highly correlated to Bitcoin, as I've been talking about, right? A lot of the altcoin markets on Poloniex, like as mentioned before, a lot of the liquidity, a lot of the volume has run dry on Poloniex. When I look at Poloniex markets, I see a bunch of market mover whales who cashed out weeks ago or a month ago and went away on summer holidays. That's what I see on the charts, right? That's why volume's low, nothing's moving up, so on and so forth, right? So, in relation to Bitcoin, on the Bitfinex charts, I mean, let's just zoom in here. We're definitely getting, like technically, let me just see here. We just kind of hit that trend line, right? And Bitstamp is below the line. So it depends on what exchange you're looking at, right? Bitfinex is kind of bouncing off the line. Bitstamp is below it, right? So breakdown on Bitstamp, and then you could see a bounce, and then maybe prior support turns resistance, and then it rolls over. Bitfinex definitely, I think, has some more weight, in my opinion. But we're definitely on the edge here, right? So Kraken's below the line. So in my opinion, let's just get this down to an hourly. In my opinion, as soon as, so we're just testing, and if we break down on Bitfinex, I mean, technically, wait a minute here. Let me just clean this up. Well, actually, we kind of did already start to break down on Bitfinex. I guess the lines are dynamic, so it could be a little bit subjective here. But, I'm seeing points of contact all three here. I think we kind of started to break down. Right? So, it's possible that it could be a fake down. Like, not every time that it breaks down or breaks out, that's the real deal. It could spike back up and bounce back up onto that level, right? So, but it's broken down on many different areas, and so one thing that could also happen, that tends to happen too, is like it could spike up, and then it could just roll over and break down again, right? And that would be like a breakdown pattern, right? I personally just want to see this thing crash and to rip the band-aid off. I'm tired of the chop, right? So I'm lock and loaded. I'm ready for some more blood. That's just me, right? This market has been way too choppy. Very, very difficult to trade a choppy market like this, right? Lots of kind of faking out on Bitcoin. We had a good little fake out right here. Would I buy in low before the first? It depends, right? Like I would buy for a bounce play if we hit a good area, a bounce zone, and I'll show you what I'm talking about. So, just to recap, is we had this little fake out right here, right? Where it broke out and chopped around and then faked out, right? Broke down. Now, because we're in such a kind of precarious, choppy zone or whatever, I wasn't really messing around too much with the concept of bag holding my Bitcoin longs. So all along the way, even though I would take stabs at these bounce plays, I've been very ruthless in cutting my longs out for this exact reason. Now, of course, that means that, you know, things were really, really choppy. And for the most part, I've been cutting out as close to break even as possible, right? So as not to take any real big hits on, you know, my Bitcoin longs, right? So I sent out a trade alert and I was just like, we broke this one, I'm out, boom. And, you know, in hindsight, there's like, man, that's some really choppy trading there. But now in hindsight, obviously it bled down lower. So I would much rather be ruthless and maybe risk, you know, looking like I'm getting chopped out than to wait till the price is down here, or even worse, wait till it's down here. Be like, okay, I'm cutting out my long now. Now we're like minus 20. I think I'll cut it, right? So for me, when the markets are indecisive, and if I'm playing on the edge like that, I cut out as close to break even as possible. I'm fairly ruthless about it, right? So, you know, every time we start to break an immediate trend line here, I basically sent the alert and I was just like, all right, I'm out, you know. And, you know, we had like bounce plays that get in, and some of these were definitely, you know, profitable, right? And by a bounce play down here, and then we broke down, and I probably cut it out. It's like somewhere around here. And so, you know, when there's good volatility and there's good range, you know, that's just called trading, right? You're just trading the range. But when it's so tight, like we're getting right now, it's so incredibly tight, then it's just chop, right? The range sucks. The market is indecisive, right? Not as fun for trading, right? I don't care, bull or bear, right? It makes no difference to me. I just want the market to do something, right? I can trade this if it goes bull. I can trade it if it goes bear, but I want it to pick a direction with some momentum and some volume. And, you know, it is the quiet before the storm, right? So we kind of broke down a little bit, tested that line, but it could still bounce back up, back into this consolidation, at which point we'll see some bounces on a lot of altcoins, right? We'll see some bounces on a lot of altcoins. And like I mentioned earlier, but I'm just going to say this for the video for people who aren't here in the room with us. You know, consolidating my altcoin bags, right? As far as like my mid caps, all the altcoins I was in, because I was in a wide medley, right? And it was like weeks ago when I wrote that market report, I said I looked at my portfolio and I realized that 50% of my portfolio was altcoins. And because we were in a transition phase where things could have easily flipped the switch and turned bear, I said to manage risk, I do not feel comfortable with that risk. So I'm going to preemptively start cleaning up my bags and consolidating to reduce that risk, because I don't feel comfortable with that. Because if things go really south, then that's going to be a big hit in my profit margin, right? It means I'm going to be giving back a lot of blood that was gained, right? It's not, oh, we're bouncing back up above this line. It's not profit until you realize the profit, until you lock in hard profit, right? And so for myself and for my message over the past, you know, month and a half, maybe even 2 months, I've been warning people Actually, you know, even when we're on the very strong bull trend, I've just been warning people for months. I've been saying, listen, if you've made life-changing amounts of money, then forget about trying to sell the top or whatever. If you're up a bunch of money on anything, you should be thinking about locking in some hard profit, right? Just lock in profit. It's just proper risk management. Can it go up higher? Sure, right? Like I said, it can go up higher. We could break into new highs. It could go to 4,000, 5,000, whatever, right? But, you know, you're not going to go broke by locking in profit. So that was a message that I hammered in. And the profit locking should be done incrementally, right? It shouldn't necessarily be an all or nothing switch, right? And then as far as the altcoins are concerned, you know, let's just look at let's just do a review here. We'll do some back testing so that we can learn from this. And listen, if you've made some mistakes and you didn't lock in profit and you didn't and you got hit hard on some altcoins or whatever, then there's you don't have to beat yourself up, right? Everything is a valuable lesson. Okay, everything is a lesson. You can learn from everything, even taking a hit, even taking a horrible hit. If you're really in this, if you're really serious about crypto, if you're really serious about the long game, I assure you that many, you know, rich crypto traders, veterans, have probably wiped out many accounts in their trading careers before they got to the point of hitting some serious pay dirt, right? So if you've taken a huge loss on any particular thing or lost a bunch of profit potential, then if you're feeling bad about it, if you're feeling angry, if you're beating yourself up, just understand that those emotions that you're experiencing are natural, that every trader at some point in their trading career will experience those emotions, will experience what it's like to take a big hit and beat themselves up and kick themselves and feel bad about it, right? Realize that that's kind of like an initiation process for a lot of new traders. Everyone experiences that at some point in time, right? But what differentiates the traders who are going to stick around and be with this on a professional level are the ones who can take a hit, learn from it, really go back to the drawing board, figure out exactly what it is that went wrong. What was the mistake? What could you have done that would have minimized the damage, that would have learned how to manage risk, right? Because trading is so much more than just flipping a switch and buying and selling and this and that. Trading is a lot of psychology. And the thing with risk management is the best risk management actually comes from experience, right? Experience will teach you not to chase markets that have pumped up thousands of %, even though your FOMO might be very strong and your greed might be strong and be like, man, this looks like the best investment ever. I can't believe it went from half a penny to 50 cents. Load the boat. Right? And you take one of those hits when you load the boat near the top and you take a hit, then you're like, holy smokes, I should really not do that. Next time I feel that sense of FOMO, I should take a ruler and smack myself hard on the hand and slap myself. Don't do it. Don't touch it. Right? And get into the joy of missing out. As in, be comfortable with missing out on things. If you don't feel like you have an edge, or if you feel like you've lost the boat, lost the boat, there's always another train. There's always another boat, right? Another thing I've learned as far as risk management, couple of things. There's two things, right? Sometimes you cut into strength. Sometimes you wait for confirmation. If you wait for too much confirmation, right? If you keep on adjusting everything, you're like, okay, well, maybe this line. What about that line? What about that line? Okay, there's one more line here. There's one more line. No. Okay. I've learned that if I'm not sung into strength and I'm waiting for confirmation, that I'm going to be ruthless with my confirmation, right? I'm not going to keep on waiting for more and more and more confirmation. And then you hit capitulation, you're down at the bottom, and you're like, okay, is it confirmation yet? Is it confirmation yet? Is it confirmation yet? And he's like, lose 90%. Okay, what about now? And then you capitulate, and you've just sold the bottom, and then it bounces, and you've hit a reversal, right? So it's like this indecisiveness, right? Like I've learned through experience that like sometimes you just got to be ruthless and just cut out. And sometimes if you're preparing for the bear storm and you should start planning and thinking of this systematically in advance so that you're not a panic seller. Because I guarantee you when you hit to the point, listen, you might have panic sold out of a bunch of bags right now at this point in time, this juncture. And there is a very good possibility that all the markets could bounce tomorrow, plus 20. And there's a good possibility that you could have sold the bottom, right? And that's a possibility that we're only going to know after the fact, right? But let me do some back testing. Let's try to get as much value as we can out of all of this. We're gonna give some examples, basically we're going to give some prime examples. I haven't shorted yet because we're still kind of testing that line. If we bounce up and then we break down again, then that's kind of like the 1, 2, 3, 4 pattern, and then I could pull the trigger on a Bitcoin short. So I'm still like, we're still playing that line. We're still dancing on that edge. And when you're dancing on the edge, well, a breakdown could turn into a bounce in your face, right? So for Bitcoin, it's not quite over yet. For a lot of altcoins, I mean, we could see some bounces, but obviously a lot of altcoins have bled pretty hard. I mean, we're seeing like minus 60% and stuff on a lot of things. Okay, so when I sent out that market report, let's just use Golem as an example. I sent out the market report. If I were to put this on a daily, I sent out a market report. Yeah, it's Strat hit that 78% area, and I think because it's bled so much, I wouldn't be surprised to see like a like a 20% bounce, especially if Bitcoin just chills a bit. That would probably be a prime market that would see a nice bounce. Okay, so when I sent out the market report, the markets were like right here, right? Let's just look at Golem. Right, lots of blood. It was like the 26th or the 27th, and I said, here's what I said. I said, I'm cleaning up my altcoin bags. I don't feel comfortable being 50%, and I said basically everything except for a couple that I'm just holding as a long-term investment, like CFI, 50% my Ethereum Classic, and so on and so forth. But I said everything, including the low caps that I bought low, everything, I'm going to clean up all my bags and reduce all my positions by about 50 to 70% across the board on everything, preemptively, like a systematic process, right? So the price was here, right? And I said the best way to do it is to set limit orders and to wait for the bounce, because the markets were bleeding for days. So it was days of dumping. Wait for the bounce so you can have the graceful exit in your limit orders. And that takes a little bit of patience, and that takes a little bit of courage, right? Like if you want to cut it off at the feet, then you gotta be ruthless, and you have to cut it early on the break of the trend line. If you missed it early, then it's best to wait for the bounce. So here's an example. This would have been the early bird special to cut out, right? Right here. So let's look at that. The early bird entry is cutting out right at the ascending trend line right here. That's the early bird entry. I didn't catch that early bird exit. I didn't catch that. Second best is the bounce when the prior support trend line turns into resistance, right? So that's when I reduced my bag significantly on things like GNT, right? Start locking in profit. The second where I closed, the second process where I closed is when I sent out that trade alert last week, and we broke down this line, which is the bull trend line right here. And I had about probably about 30% left of my GNT. And then I just cut it. I sent out just a hard trade alert. I'm like, I'm out, poof. And then it bled more. Right? And then same with ETC. I still hold some ETC as an investment because you have to basically. Oh, I'm still holding Edge. I still have some Edgeless, by the way, which I may cut. I have to look at the Edge charts, but I'm up significantly in profit on Edge, so I wasn't terribly concerned. Looked like it was trending nicely last week, so I got to take a peek at that chart. Okay, so Classic, Ethereum Classic. You have to kind of draw a line. What's your investment? What do you want as an investment capital? And what do you want that? And when I say what's an investment, I mean strong hands investment. How do you know what strong hands investment is? You take the worst possible case scenario on something, right? And you ask yourself, would I feel comfortable in bag holding if the price goes down to XYZ? So I kept with the Ethereum Classic that I had left, and I was systematically closing it along the way. But what I had left on my ETC, I closed half of it on the breakdown, sent out a trade alert for that, on the breakdown of this line, right? I was watching this line because we had a nice little, bull pennant or whatever, but it's only valid if the line holds, and it didn't, so I cut half. But the other half I'm holding as an investment. Long-term, strong hands. And what do I mean by that? Well, that other half I bought at 90 cents on the second day that it hit the exchanges. A worst case scenario that I had to ask myself, would I be comfortable in bag holding this ETC if it drops all the way back down to 90 cents? And the answer was yes, I could be comfortable with that. Will I lose out on all this profit potential and so on and so forth? Absolutely, I will. But it's a long-term investment, right? With that particular bag, and my cost basis was low, so I have a lot of wiggle room before I'm even seeing a loss on that, right? But specifically, what I had left riding on trades from the early breakouts or whatever, well, that was closed. Could it bounce or recover? Fine. Maybe that's a trade for another day. But now, here's the thing. If you bought at higher levels, if you bought Ethereum Classic anywhere up here, then you're probably not in a same comfortable position of being able to hold some long-term as an investment because you didn't buy it in accumulation. It was a little bit late. So buying anywhere up here is more along the lines of a trade and not an investment, in my opinion, right? But everyone has to make those decisions for themselves. I just tell you guys what I do, but all our situations might be different, which is why you can't always just 100% shadow what I do, because my situation might be different. If I say I'm holding 50% of my ETC that I was holding up here, right? I didn't ride 100% of my long. I closed out along the way, right? So out of everything I had when I took that breakout trade and had some as an investment, I would probably say that right now I probably only own 20% of those original holdings because I locked in profit along the way, right? 20%. Right, so my position is greatly reduced. So if I say I'm gonna keep 50% of what I had up here, that might look different for you, your portfolio, your risk tolerance, and what price you got in. If you were in with us last year when we were accumulating, when I kept on going on and on and on about how ETC was an accumulation zone, and you bought some cheap ETC, a buck, cheaper than $1, under $2, whatever, $1.50, $1.30, whatever, then you you might be in a similar position as me where you can keep some as an investment to see where it goes, right? But if you're buying at $5, $10, 15, 20, whatever, then you're not in the same position. So you have to look at what I'm doing, and you have to assess based on yourself what your position is. Right? And that's different for everybody. For GNT, when I closed out my GNT, it was pretty much, I was closing it out. I was just closing profit. And going back to GNT, we bought GNT down here. This is rated live in the trading room all the way down here. So for me, it was like, all right, I'm taking profit. Boom. Right? But if you bought GNT anywhere higher, right, then maybe you would have had to cut out earlier on it. All right, so this was around the 28th. All right, so are we the question is, are we in a full throttle bear trend for Bitcoin? I would say for Bitcoin, we're right on the edge, but not yet. Have we hit a bear trend? Have we hit a bear trend on altcoins? Yeah, that system already started big time, right? One sec. All right, so on June 27th, when I sent out the market report, I'm just gonna read exactly what I said. I said the Bitcoin markets had a typical 3-day sell-off and made a higher low on the larger ascending trend line. That said, the market is also showing a lot of weakness, producing a large head and shoulders and with bearish divergence on the 1-day stochastic RSI. Not to mention the 1-week stochastic crossed over 100 and is headed downwards. Although it's still possible to recover, I'm taking measures to batten down the hatches and prepare for a possible bear trend. I didn't buy today's dip because the range is getting too tight and the risk is much greater than the previous dips. We've seen a lot of blood on altcoins today, and I've been reducing all my position sizes on the bounces. This can be done by setting limit orders so as not to dump on everyone. I'm working on reducing all my altcoin positions by around 50 to 70% regardless of price areas. My reasoning is that the dollar value of everything would likely drop on a BTC bear trend. During the 2014 bear trend, there weren't any coins that kept any of their higher prices. Even things like Litecoin went from $55 down to 90 cents. The only markets I didn't reduce was ETC, AMP, and CFI. And AMP had that tech release, right? That was coming up, and that bled hard, and I had cut out of that later. But I should have sold into strength prior to that. And we're going to look at AMP too. I want to show you guys AMP and a typical sell on the news type of event, or maybe even sell the day before the news actually. Current crypto industry is more mature. Let's see. So the current industry is more mature, so I'm not entirely sure how all these new tokens will fare in a bear trend. In 2014, it was all about proof of work clone coins, and now it's all about ICO tokens. I've made amazing returns over the past 4 months, and I'm extremely satisfied with the results. The dollar value of my portfolio has increased by at least 1,000%, if not more. For this reason, I'm still continuing to pull out hard profit out of the markets. I withdrew another 10% of my portfolio into my bank today, which was from one of my cash hedges sold from 3 days ago. I likely pulled out around 25% of everything out of the markets over the past month. I have zero concerns doing this because I know that trading can replenish my crypto coffers, and it will allow me to trade with peace of mind. I'm still blah, 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 blah. Anyway, so that was on the 27th, right? So 27th was here, and the strategy of setting up some limit orders on the bounces, right? Could have been done across the board on a lot of markets. So let's do some back testing on a bunch of different markets, even some of those low caps, and see where the markets were. So here's some mid caps. Here was BAT. Okay, so BAT was here and then it bounced. So, you know, setting limit orders for the bounce would have been some good exiting, right? So, what else did we have? One sec, let me. And so even though I consolidated a lot of my funds over the past few weeks to a few markets, one thing that I did for fun, just for my own personal study, is I actually kept all my portfolio intact on Crypto Compare / portfolio to see how much more all my bags would have bled had I not started cleaning up preemptively. And my bags would have, I'd be in even bigger blood right now. Everything dropped significantly from that June. Basically, June 27th was the last major bounce on a lot of altcoins, like last major dead cat bounce on a lot of altcoins. If I look at my whole portfolio, it shows like almost like a weak double top, and then it just kept on breaking down and falling lower and lower and lower from that point on. So let's look at AMP. Actually, let's do some back testing on AMP. So this is an interesting thing to learn on, right? So when I said, you know, when I sent out a trade alert, I asked myself what markets, and I took basically I'm pretty sure I took a hit on BAT, right? I did take a hit on that. The thing with BAT is you know, it's like one of those markets that had all the hype but didn't have proper price discovery, right? And, you know, you got people, this is the madness of the ICO bubble, right? You've got people spending $3,000 to race each other on fees so that they can go buy some BAT and become BAT whales on some illiquid garbage token that's bleeding out the eyeballs. They're now, those whales will never be able to exit those positions. And they spend thousands of dollars to do that. So just because someone's a whale doesn't mean that, you know, they're not going to lose money and bleed out the eyeballs, right? Okay, so basically my rationale with AMP was looking at, okay, what markets, like at the time, Poloniex markets were rallying very, very hard at the time, right? So I looked at what markets didn't rally hard yet, and BAT and AMP was like somewhere around here when I sent out a trade alert. And they also had this tech release and so on and so forth, right? Now here's the interesting thing. You often hear, okay, sell on the news, right? Buying the rumors, sell on the news. Well, selling on the news happened and then boom, it dumped, right? Now the early graceful exit probably would have been to sell the day before, right? And confirmation would have been to sell on the breakdown of this immediate line. Then there's a secondary line right here which broke down, and now AMP's just toast, right? It's not to say it can't bounce or whatever, but you know, it's completely toast. So I did not sell into strength, and I did not sell early on AMP. I sold, you know, once it was like kind of midway bleeding type of thing right here. So I still made a little bit of profit, but I didn't really make that much off of it, as much as I could have, because I was up like, you know, more than a double, and you know, it just bled out, right? So this was a play that I should have sold into strength before the tech release or on the immediate breakdown of this trend line, right? So you can always back test and look through whatever trades you've made, and you can hit the drawing board and you could ask yourself, okay, what exactly happened in this trade, right? Entry was fine. Entry was all right. Exit, not so fine. Still made a little bit of profit off of it, but, you know, definitely cut my profit short on that. Generally, there is dump post news. Yeah, generally the dump happens like as the news breaks out. Like they did their tech release and everyone just dumped their bags, right? So it's like pre-market FOMO, everyone's all excited, and then the tech release, okay, well it's over, party's over, dump your bags. It's kind of twisted that way, you know. And actually, someone I retweeted something on Twitter. No, it's not that it was crap news. It's that the anticipation of something is always more exciting than the actual news itself, right? Think of it like with anything, okay? Let's say you're really excited about buying a new car or buying a new product or going to some party or anything that's like really exciting for you, okay? The excitement and the anticipation of that is generally where all the bullishness happens. But the actual event in and of itself is usually uneventful. Usually the craving and the anticipation of it is more exciting and more of a thrill than the actual event in and of itself. It's always like, you know, the grass is greener on the other side. So the FOMO and the anticipation of the news, any news event, you know, buying the rumor, selling the news is always more exciting than the actual news itself. Then people get the news, then they check out, they check out the platform, whatever, and they're like, oh, okay, well, whatever, this isn't as exciting anymore, and then they just dump their bags, right? And some traders know that psychologically, and they'll just dump their bags no matter what, right? And obviously people did it the day before, right? So that's a psychological lesson that one can learn from, right? You're so excited about going to that party, then you get to the party, and then you're like, oh, whatever, you know, it's not as much of a thrill. You know, you're so excited to get that new car, that new watch, or that new whatever. Then you have it, and then you're bored, right? It's like, oh, whatever. Now it's just a part of your routine, right? There's no more build up anymore, right? It's the honeymoon phase. You know, it's the initial part of the relationship that's so exciting, or the anticipation of the relationship, and then you kind of, it just plateaus, right? So it's like that with everything in life psychologically. So that's why buying the rumor, selling the news, right? Boom. So I could have played, knowing that, I could have played that a little bit differently. Now, let me show you an example where I did sell into strength and I didn't wait. Big platform release, blah blah, and you know, some people didn't like it. They thought I created the top. And I look at the current markets, I'm like, I'm actually pretty sure I just sold the top. Actually, I don't, maybe I might have contributed to this a little bit, but I don't think this would have held up. I really, given all the markets being so highly correlated to each other and everything dumping the way dumping the way they did, I really doubt that ICN would have continued on this trend and, you know, went to $10 and whatever, right? I really doubt that, right? So here's an example where I either sold the top, created a top, both. You would have had a top, one way or another. You would have had a top on ICN. This time I decided, you know what? I'm not going to wait for confirmation. I'm not going to wait for some other people to start, you know, doing that. I'm just going to sell right into strength because this market has gone up. You know, we sent out the trailer at 35 cents and it went to $5. And I said, damn, this market has gone up a lot in the past few weeks. And if I don't take profit now, I'm just being greedy. Right? Come on, 35 cents to $5. I was like, man, that's some pretty good returns. I'm taking some profit. I don't know about you guys. I'm taking profit. I'm selling strong. I'm not waiting for some whales to start dumping and then like, oh, let's wait for confirmation and then what? And then, you know, you sell. Well, but then you have AMP. This is what happens with AMP, right? Now, I guarantee you, here's if we could go into some alternate universe and quantum universe and play out both scenarios, I guarantee you if I would have sold the top on AMP, people would have said I created that top too, right? Well, guess what? The top was created regardless, whether I sold it or someone else did. Someone sold it. Someone created a top, right? So I say, like, this is my rule of thumb for like selling into strength from now on. You know, if someone's got to create tops, it might as well be us. So that's what I say. If we have that much influence over the market, who knows? Right? I'm not trying to influence the market or anything like that. That's generally why I just wait for like the bigger plays, the bigger moves. This was a good play because we got in nice and early when everything bubbled, and then it had its moment to shine. It really popped off, right? And it broke all the fib levels. And I did an extension, and I saw that. I was like, come on, if I don't take profit at $5 when I bought this stuff at 35 cents, then, well, then I guess I deserve to lose some profit, right? So sometimes you got to put your greed in check. And really, there's no magic formula, right? Like sometimes you might sell into strength and you sold too early. And you're like, oh, I could have, should have, would have, you know, maybe I would have sold there. And I knew I run the risk. I could have sold there. Maybe it went to $10 and be like, oh, Rocky, you know, what'd you do? You sold that 5, it went to 10, you know, like went to 50. If it's Ethereum, it'd be like, it went to $400. Come on, would you, you know, like, there's no cookie cutter formula, right? There's no like one thing you can do is always going to work all the time. Sometimes you ride the trend and it goes up higher and higher. Sometimes you sell into strength and then it went up like 10 times higher. Sometimes you nail it and it's like perfect trade. This to me was, I would say this was a perfect trade in my opinion. This trade was like the best execution that you could do on a single trade, in my opinion. You know, breakout, you know, nail the top, done. Not every trade's gonna be like that. A lot of trades are a lot messier than that, right? A lot of trades are a lot messier. So they're not all clean like that. Let's look at some other markets on that 27th bounce. Here's a good example. All right, so here's another example. I actually sent out a trade alert for this one, where I closed out of a trade for some profit. And, you know, I could have sold into strength, but what I was looking for was a breakdown of an immediate descending triangle, right? So we had this triangle, and it broke down. I sent the trade alert. The price was at 0.1248. 0.124, so we got to get down on the lower time frames. 0.1248. So it looked like it was kind of a late exit, and it kind of was. I mean, I could have sold earlier, coulda, shoulda, woulda, right? But, you know, so I was talking about the immediate breakdown. I sent the trade alert, and the market was like right here. I was talking about how I closed on the breakdown, right? And if I didn't do that, you know, if I didn't close on the breakdown, then on my Zcash right now, I'd be down another like 27%, right? Dollar wise, probably even worse than that. What is the price here? 6.25, June 25. Let's see what that was dollar wise. June 25. Okay, right there. And dollar-wise, that would have been like minus, you know, 30% or whatever, right? So I'm glad I cut out of Zcash and locked in some profit, right? I made 100% returns on that breakout, on that trade. I'm glad I closed out. Sometimes if you get too greedy, you hold on too long. Doesn't work out. What other stuff? And I'm back testing all of this because it's really good to do that after a big cycle, after big moves and stuff. It's really good to do that and to actually try to get as much value and to learn as much as possible, right? Let's look at ARK. That was a good one because you know, let's look at ARK. Actually, that one would I'd still technically be in some profit on that. And this is actually one where I also sold into strength as well, I think. Let me just see here. ARK trade update. 3.8. Okay, cool. So on 7/17, okay, here's a good example of was it 7/17? 6/7, 6/7, sorry, my bad. 6/7, right here, ARK. Sent out a trade alert. What'd I say? I said ARK made a nice move this week. I've decided to sell 50% of my position for 184% BTC gain. I'm doing this to pull out all my initial risk capital plus lock in some hard profit. The freed up capital can now be reinvested in something else that's dirt cheap so I can repeat the cycle. The rest I'll let ride for a much bigger move. Perhaps sell another half on 10x if possible. Now, obviously, the markets were all kind of bullish, so I let some ride. But, you know, sold into strength up here. Again, the value of selling into strength sometimes and not waiting for the breakdowns, you know, boom. So that was nailed, that one. And then on the 27th, I closed out the rest of my bags on ARK. You know, and we bounced right up here, which is still profit. Right? And I could have sold for higher, obviously. But you know, it's not perfect, right? And there you go. And now it's bleeding out more. So, you know, cleaned up some of my bags here, and there you go. So here, and I bought I think it was like right here. And I even went in the red a little bit. Right? I even went in the red a little bit. So someone's asking, Rocky, when you don't sell the top, do you feel like you left money on the table? Well, this is why this is why I always do like partials, right? I never go all out, because maybe I go all out and then it goes up like 10x, right? Boom. You know, so so that's why I do partials, right? And so if it went up higher, then I'd still be in a good spot. And if, you know, I still closed out at profit. So even closing out on the little bounce there was still up, you know, 100% instead of the 200 or whatever, 184. I said, okay, so that was another example on a market with some back testing here. And you know, like I said, everything that I do, I'm just doing as a guide. I cannot give people trading advice. I cannot tell you when to sell. I cannot tell you when to buy. I cannot tell you what's a good investment, what's a good trade, what's not. You know what? You know what the honest, raw truth of it is that in essence, if you're looking for absolute certainty in the markets, you're not going to get absolute certainty. There's no such thing as absolute certainty. The traders, you know, the gurus who end up getting the most hate and the most trolls are the ones that speak publicly as if their word is like the ancient secrets of the universe or something. Like they speak in affirmative, like it's some kind of affirmative fact. Like it's not just a hypothesis or an opinion, but it's based on absolutes. And I see a lot of these traders on Twitter where they're like, all right, the market's going to do this. This is an absolute. Right? And then people blindly follow them like sheep. Like they flock around those people like moths to light, because there's a lot of uncertainty in the markets. And those sheep who just want the quick targets, hey, target, tell me when to buy. Tell me when to sell. Tell me when to do. I'm your sheep following. I will do whatever you tell me. I'm looking for a strong leader. Right? I'm looking for a leader to tell me with rock solid conviction that they know what's going on, because I don't know what's going on in the markets. I'm so confused. I'm so uncertain. And therefore, I will flock to a strong leader who speaks to me with conviction, who tells me everything is going to be all right, who tells me when to buy, who tells me when to sell, who tells me exactly what's happening in the market, so on and so forth, right? And you know what? Those trading gurus, they can build up very, very fast followings, right? Some of them could go like 10,000 plus followings in like a few months. I'm not gonna name names, but you see it and they speak with absolute conviction, right? But it's not honest. It's not honest, right? They're a more honest approach is to tell people, listen, if you're to actually teach people how to trade, right? Because that's not teaching people how to trade. That's just giving them fish, and sometimes you might be wrong. Now, here's the thing. Just like some kind of like, it's like blind faith or whatever, right? Exactly. Some type of blind faith. Now, let me just say this. When it goes south for those kind of leaders, when they end up wrong, then everyone trolls them. You were wrong. You said the price was going to do this and it did that. You were wrong. You lied to us, scammer. They're like, so they're not taking any responsibility for their own actions. But the leaders, those kind of trading gurus, created that problem, and now they're getting their karma because they spoke with such conviction, and they wanted the sheeple to follow them with blind faith. And they didn't want them to make their own decisions. They just want to give them targets. Everyone wants targets. No one wants to put in the hard work. Everyone wants, hey, what's my target? Tell me what to buy. Tell me what to sell. And if they're wrong even once, the pitchforks come out. Scammer! I want my money back. They start attacking them and pitchforking and no, right? And I'm just like, you know what? I do not want any of that garbage. I do not want to be that kind of leader. I do not want those kind of sheep. I don't want to touch that stuff with a 10-foot pole. So that's why the way that we like to run the trading school is like, listen, we're gonna teach you our trading strategies. We're gonna teach you about crypto market principles. We're gonna hammer in the risks and talk about the risks like a broken record so that everybody is crystal clear and not drinking the Kool-Aid. And we're never, ever going to tell you with absolute solid conviction, like we know what the heck is going to happen next, right? We're always going to talk in possibilities and probabilities, and we're always going to tell people you need to take responsibility for your own trades. We're interested in teaching people how to fish. We're not sitting by the mountainside tossing fish like barrels, and always telling people you need to make your own decisions. And you can shadow our trades, but we might be in different entries, different positions, different risk tolerance, different everything. It's all different for everybody, right? So ultimately, our goal is to create traders who are actually good traders. People who, if they left the school, could go on their own 2 feet and take some good trades, and who will remember the lessons on risk management, who will remember to look at both sides of the markets, who will remember how to manage risks, who remember that it's risky stuff and you shouldn't chase pumps and get fleeced and this and that, right? And to absolutely take responsibility for one's trades, one's emotions, because that's what trading in crypto is all about. Crypto is like be your own bank. Well, guess what? If you're going to be your own bank, banks got to put on the big boy and the big girl pants, right? They have to manage their own security. They have to make their own investment decisions. And if they flop, well, if the banks flop, the big daddy government gets to bail them out, right? I mean, I guess in a crony capitalistic sense, if you're a big bank and you flop, big daddy government's going to fleece the sheep with tax-paying dollars and bail you out anyways. Or a bail-in. Oh, we'll just pilfer out of people's bank accounts with a bail-in. Hey, because it's only insured up to $100,000. Sorry, I digressed there for a second. So maybe it's not like being your own bank. Maybe it's like being your own sovereign bank without anybody to bail you out, right? So, but in the crypto world, no one's going to bail you out, right? And there's no QE, there's no bail-ins, there's no bailouts, nothing. Wait a minute. Unless, of course, you invested too much money in the Dow last year and Vitalik and Co hard forked, and okay, so maybe there is a few bailouts here and there, or if you got were a victim of a flash crash on GDAX and they refund everybody, okay, maybe there's a few instances of some bailouts here and there in crypto, but it's not the rule of thumb. Don't get used to it. Don't think that people are going to bail you out, type of thing, right? So there's a couple of examples, right? There's a couple of examples. All right, I'll give him that. But crypto is the jungle. It's the Wild West, and every time we get flood new students, I always go on my Wild West rants, right? This is the jungle. This is nasty stuff. There's all kinds of craziness, right? And I try warning people. I'm like, honest to God, I can show you some tweets weeks ago, or month or whatever, like when Ethereum was close to like, $400 or the 300s. I had some noob troll me. Like, oh, I bet you're going to know your magic crystal ball TA, that you're going to know when the bear trend and the reversal, and you'll be able this and that. Yeah, right. Yeah, anyways, just people trolling, right? New people come into the markets, they make a little money on a bull trend, and then they don't want to listen to the seasoned veterans. They don't want to say, hey, how do you feel about losing 90% of your crypto portfolio and dollar value in a bear trend? I've seen it happen in 2014. I've experienced it. Listen, I was a part of the dumb money in 2014. I'll be the first to admit it. I bag held some stuff. I know what it's like. I bag held some Dogecoin. I bag held some WorldCoin and some other garbage trinkets at the time, right? And I know from firsthand. I even bag held some expensive Litecoin, right? That I bought at like $30 or whatever, right? So when veterans, for those who are new. When veterans tell you a crypto bear trend's nothing to mess around with, we're speaking from experience, right? We've been burnt. That's how we learned our lesson. We went through the trial by fire, right? We've had our bags bled hot. Now, the one thing that I had going for me at the time is I didn't have a lot of money, so I didn't necessarily lose a lot, although I did get scammed on some pre-order schemes. And my initiation to crypto in 2013 was getting scammed on pre-order mining equipment and literally losing like 4K as my first major Bitcoin transaction. How's that for an initiation into crypto? Since then, I can assure you I was extremely judicious and cautious about risk management. I can assure you that much, that I learned my lesson. And guess what? I almost quit. I wanted to quit. I was in so much pain at losing $4,000 on pre-order schemes that for me at the time it was like the end of the world, and I beat myself up. How could I be so stupid? Blah blah blah, this and that, blah blah blah, right? And you know what? I didn't quit. I continued. I persevered, and I just kept at it. And then I started to just manage risk, and I didn't go YOLO, and I didn't invest more. From when I started to trade, I never invested more than I could afford to lose. And I learned from that because obviously I didn't want to lose any more than that. And you know what? If I had quit, my life would be so different today. I would be still working some 9 to 5 somewhere, waking up in morning traffic. I'd be a slave to someone else's schedule. I wouldn't be my own boss right now. Right now, I could say that I have financial freedom in my life. I have just freedom, period. I do what I want now, right? And I love what I'm doing. And I'm not saying that to brag. I'm saying that as a lesson because I almost quit before I got started, right? I almost quit before I got started. And if I didn't have perseverance, and listen, I had to suffer through the 2015 in accumulation. The markets were bone dry as a bone in 2015. I need perseverance. When Bitcoin went down to $166 and I started accumulating and loading the boat, it took vision and perseverance. You know how many times we almost broke out of 300 range and got faked out? It was like 3 or 4 times in 2015 that happened. And us traders started getting yo-yoed around. And anybody who was trading in 2015 knows what I'm talking about. And then finally, when we broke out of that $300 breakout in 2015 and went to 500, finally we realized the bull trend was started. right? The bull trend was on, and now the continue accumulated. Let's do it, right? Let's do it. And it took perseverance and vision to be able to hold and have strong hands and believe in Bitcoin to the point where you could hold it until we're at now. Because at any point in 2016, one could have gone all out, be like, I'm happy with 100% gains, 200% gains, 300% gains, 400. I'm happy with, right? And only now, have I really been, now I did lock in a little bit of hard profit here when things looked a little sketchy, but I loaded the boat and hedged so heavy into altcoins that I actually tripled my Bitcoin holdings on this entire run up just from altcoins, which is awesome, right? Or quadrupled, actually. Probably, maybe even more than that. I think I 5x'd it. Never mind tripled. I 5x'd it, right? My Bitcoin holdings. Everything that I had made and everything that I accumulated in 2015 and 2016, in literally months, I quadrupled or 5x'd it in months of altcoins. It was the most ridiculous thing. This is the craziest bubble I've ever seen crypto. Listen, we had some bull trends in 2016 in crypto and altcoins with Ethereum and stuff, but I have not seen anything like this. This has been nuts, right? A lot of things broke out into like crazy highs, and that's what I was telling people, right? Don't be shy to lock in hard profit. Anyways, I don't want to go off and on, right? Let's look at strat. Let's just do a really quick. And you know what? You're absolutely right. I honestly, I'm still bullish on Bitcoin long term. Believe me, I really am. I think Bitcoin can easily go to $10,000. I think it go to 20 if it survives and continues being the king of crypto. I wouldn't be surprised to see Bitcoin at $100,000 a pop. It's supply and demand. It's simple math, right? Now, will we go on bear market cycles and stuff before then? Yeah, I would hope we have several nice cycles so that we could keep on trading and accumulating, right? There's nothing wrong with a good bear trend. It's good when you torch, sometimes when you have a nice forest fire, it means that you can have vegetation that grows back, right? There's a rejuvenation process, right? There's some types of trees that can only sprout and grow after forest fire. I think it's like the jack pine tree, right? Their pine cones will only sprout in extreme intense heat. So there's a type of tree that will only grow after a forest fire, after everything's been torched down. So some people get scared of bear trends. I welcome them, especially after I've taken some profit and stuff like that, because it means we just get to reaccumulate and do it all over again, right? It means we get to do all this craziness all over again, the greater market cycles. And if you just recently joined us, if you just recently joined crypto in the past, couple weeks, couple months, and you're feeling, oh, I missed the boat, so on and so forth, then I would tell you, you of all people should be the most excited about a bear trend, right? Anyone who's joined us recently should be the most eager and the most hungry and the most excited than anyone else for a bear trend. Do you know why I say that? Because you missed out on the opportunity to buy everything cheap before it bubbled in. And you might have even joined and contributed to this bubble and buying in higher and being late to the party. But if you can see the forest from the trees, and if you can survive the bear trend, and if you can survive the greater market cycle, and you're still around in a year from now if we get to reaccumulate, then if you came into crypto because you're bullish on it long-term as an investment, then you should want the absolute cheapest prices possible, right? You should want the absolute cheapest price possible. Listen, if you wanted Ethereum, if you were attracted to Ethereum because you loved it at $400, then you're going to absolutely love it at $40. And if you don't love it at $40, then what the heck are you doing? Why would you love it at 400 but not at 40? right? Wouldn't you just drool at the opportunity to buy some $50 Ethereum? Right? Shouldn't you just be absolutely over the moon over that? And maybe it won't crash that hard. Maybe it won't. Maybe we won't get those abysmal levels. We just got to take it one step at a time and play it on the technical analysis. We just got to take it one step at a time, play by play. That's where technical analysis comes in. Right? You know, I did a bounce play here in the room. 20%. Bam. Right? Some people took the trade with me. Would I do it now? No. What would I look for as another level for Ethereum that I would be interested in buying? I think I would be very interested in scooping up some Ethereum around this level. I think this looks like especially if we got like a fast wick down. I think this would be sweet. I would, if we, for whatever reason, had a very sharp red stab down into this level, 68, because it's a liquid market, and you know, prior resistance, some support here, I would take a stab for a dip buy. Would I hold it as an investment? Probably not. Those of you who are with us knows that I was very patient before I loaded the boat on Ether. I waited till we had confirmation and we went into accumulation. Now, the best case scenario is that we get some sharp red dumping. Those types of dip buys usually produce the nicest bounces, right? The worst case scenario is a slow bleed. Let me show you the difference between a sharp and a slow bleed, because we've seen both. This is sharp. Boom. Big red candle. Buy it. Big bounce. Sharp move down, sharp move up. Big V. Boom, boom. These dip buys are amazing. The worst dip buys are the slow, grindy bleeds. Like, imagine if you tried to do, oh, we hit support, and then you're slowly bleeding down again. Oh, goodbye, something is slowly bleeding. Like this grindy bear. Like, this is what we had here. This was a slow bleed. Look at this. I'll show you an example. This was like, get the heck out of Ethereum's way. It's in a slow bleed bear channel. Not a lot of good sharp dip buys. You would have just got bled out until a reversal. So it's best to get out of the way. Not as exciting to trade this. You just got to get out of its way. Not a lot of good dip buys. Whereas, look at this. Dow hack. Sharp. Bam. Absolute pure panic. Amazing bounce play. Right? Those are the bounce plays you want to go for. Bam. 80% bounce. Oh, like, you know, from the bottom to the top. Boom. 86% bounce play. Snap. Right? Nice sharp dump. Oh, another sharp dump. Boom. Nice bounce play. Now, you don't have to nail the bottom from the top, from the this and that. Right? You could catch the meat of it. All right. All right. So let's talk about Strat. So I sent out a trade alert on a oops, I'm gonna go up to the bigger time frame here. All right, let's try this again. All right, bigger time frame. So the 60 the 61.8% bounced, but very, very weak. And so in yesterday's trade alert, I said I cut out at close to a break even minus fees, right? So that was kind of like a false call. Now it bled out more, right? It bled out more. And Bitcoin's bounced a little bit today. So if Bitcoin can hold that line, it's possible that we could at least see, you know, maybe like a 20% bounce or something like that, right? So, So I took a, or like 30%, 20, 30. So I took another small stab, position sized, right? Like not going YOLO, but I did take a little small stab. And if there's any other markets that are really, really deep in the blood that you see, you could at least squeeze possibly 20% bounces. Now, I'm not gonna point out every single market that you can go do that in, and there's a reason for that. I don't want everybody with altcoins, they're not super liquid, so I don't want that 20% bounce to be everybody in the room or everybody in the school, trading against each other, and then some people will be winners and some people will be losers. So I have to be very cautious with the kind of trade alerts and trades that I sent out, as we've seen with Stratis. I don't know if this was liquid enough, right? And I think some people might not have cut out in time, right? Or maybe some people didn't read the alert, or maybe some people bought in higher, maybe, so on and so forth. So in situations like this, like I'll use this as an example, situations like this, I think it's important that everybody knows how to fish and finds those opportunities, right? So in less liquid markets, maybe wait for like closer to 78%. But in this situation, you see prior resistance area right here, and it's bled out a lot. Wouldn't be surprised if it bounced up to at least this next fib level. That could be like a quicker targets, limit orders, not riding it for the 300% power moves or whatever, just doing quicker targets, quicker bounces. Rule of thumb is if you go to take a stab at a dip and the market rolls against you, you should cut out at close to break even or on the breakdown of support. You shouldn't try to bag hold it in situations like this. So that's the rule of thumb. Quicker targets, limit orders, markets that have bled significantly. What exchange I use for alts? Poloniex or Bittrex, right? Bittrex is kind of like my new favorite, but Poloniex has better liquidity, right? So that's just one example. So there's probably a whole bunch of them. So ultimately, if you're gonna go dip hunting, find ones that are really, really bloody, deep in the red, maybe 78% retrace from the bull trend, or if you have prior resistance or support levels, shorter targets. So you can do that. You could also do that as a hedge to get more Bitcoin and therefore lock in more dollar value and play that. But you also have to really manage risk, be aware of the risk. How you deal with risk is you position size. You don't go too heavy on any one trade. Still obviously hold a bunch of dollars and certain trading accounts, and shorter targets, limit orders for the quick retraces and bounce. You could do 10%, 20%, 30%. But unless everything bounces and has huge recoveries, which if it did, then that's a possibility. So I'm not going to necessarily tell you which coins to go out and do. I think everyone should just go out dumpster diving, hunting, quicker. Just treat it like a sniper. Very, very quick targets. Boom, boom, in and out of the market. Just set those limit orders if you see anything really, really deep in the red. So you could just look at Poloniex for things that are red, and then look at the charts, right? Just so that not everyone's chasing the same markets, right? And see if you can go squeeze out some 20% plays on certain markets and stuff, and just manage risk. Don't go, like I said, don't get trapped in any one market. Don't go too heavy, and be mindful. Set mental or hard stops, and cut it if it gets worse. If it gets worse, just cut it, right? Like what I did with Strat yesterday. I just cut it when it was close to break even. So all right, hope you enjoyed this update / lesson. There will be more to come. Let's see if Bitcoin, it's tested that line and it's creeped down below the ascending trend line. So let's see if the bear trend is confirmed, and if we break down lower and continue to go down in a trajectory. If we do, maybe like the 1500 area would be a good dip buying area. I'll keep everyone posted because Bitcoin's a liquid market. So my cash hedge would definitely be to buy some cheap Bitcoin at lower prices for bounces and stuff like that. And like I said, the closer we get to August 1st, I don't know. I just feel like it's a very bearish event. There's a lot of uncertainty. We don't know what's going to happen. The network could split in two and all that kind of stuff. So we don't really know. I'm not quite leaning towards bullish the closer we get towards that event, though. But you know what? The markets can be irrational longer than people can stay solvent. So you never know. Always still prepare for both sides and both possibilities. If we suddenly flip the switch and turn bull, then go back into bull mode. But that's a trade for another day. And if we continue to bleed out bear, then if we break down below that trend line, if we break down again on Bitfinex, you could pull the trigger on a short, right? And there could be an opportunity for some bounce plays, but you know, let the market bleed out for several days. Often after 3 days of blood, we do get a bounce. So look at support levels, look at your fib levels, and I'll keep everyone posted as the markets change and shift. We'll convene again, and I'll keep people full of updates as we go along, and trade alerts and stuff like that. So learn as much as you can through this experience. Stay safe, manage risk, and let's see if we can make some money. Cheers.